It's about that time of day again, folks. Welcome back. Welcome back. Are you ready to rock and roll this week? Are you excited about another trading week in front of you? Boy, I hope you are. I definitely am. Got a busy week in front of us here. End of the month coming up here. We've got the FOMC. We've got news out of the ECB this week. Boy, it's we'll have non-farm payrolls end of this week. Boy, exciting week ahead of us. Welcome back. My name is Joseph James. I'm a lonely old day trader here with SchoolOfTrade.com. Come out and see me any day of the week, Monday through Friday, over at SchoolOfTrade.com. And of course, my colleague and partner in crime, Marty Yerrico from Traders Audio. Marty will not be joining us here on today's call today. So we'll be jumping right into charts here this morning. Once again, my name is Joseph. Thank you so much for coming in and joining us here today on this daily call. I'm a technical analyst, which means I'll be starting with a top-down approach this morning, analyzing to see what happened over the last few weeks, over the last few days, right? Starting with a much slower time frame. And then I'm going to move it all the way down to see what happened overnight. And I'll analyze what's happening coming out of London. We'll try to anticipate the direction at the open this morning, because I know if I can anticipate direction at the open, well, I can find those high percentage trading opportunities starting as early as 8 a.m. Eastern time. Now, my strategy will work on any market, any time of the day, but ultimately what we're trying to do is we're trying to identify the early morning opportunities. We can give you guys a roadmap, right, of what to expect. Now, normally, once I'm done with you, we'll head over to Marty Yerrico on the floor of the NYMEX exchange. We're having some technical difficulties on the exchange this morning, so we'll jump right into some charts here with you guys. Let's get started. Now, once again, that's the before. I'm going to start with a top-down approach. So I'm going to look at some slower time frames here, but first I want to glance over at the news. Now, every morning, just before we start this this call with you guys at 7:30 a.m., I update our crude oil blog, and you can get there by going over to sidewaysmarkets.com, and then up top you'll notice there's a link up top for the crude oil squawk and prep. So head over to the blog at Sideways Markets and check that link out. That's where you can find all of our charts. And you'll notice, of course, later this morning, we'll post the video recap. Let's look at today's news just briefly here. And we can see that, again, first of all, I do want to make sure we point out the fact that this is the end of the month. Now, the end of the month leads into the beginning of the month. And when we're talking about crude oil, we're talking about, well, the first thing I think of is jet fuel, right? Shipping companies. Airliners, right? These are companies that will come into the market at the end of the month and the beginning of the month, specifically to crude oil, because they must hedge themselves against rising prices in the future, right? Imagine yourself being the owner of a major airline. You want to hedge against rising fuel costs. That way you can budget your expenses, right, for the next 30 days. And of course, crude oil rolls over monthly, so it will be a month-to-month hedge because it's such a volatile commodity price. So we know at the end of the month, we're always going to start to see some extra volatility and some extra opportunity. In my personal opinion, the end of the month is also that time when, the weird trades come out, the Hail Mary trades, the if I don't get out of this position, I may not have my job next month trades. I've had a lot of scenarios where I have students of mine who will contact me saying, I've got a certain client that needs a position, or I've got a certain boss that wants me in or out of a position before the end of the month. So a lot of the times at the end of the month, you've got the either unaware that the end of the month is there, or you've got the necessity. I can't keep my job. I can't keep my client. I can't hit my numbers. I'm going to get killed if I don't get out of this position, right? Put yourself in the shoes of other traders, and you can imagine some of the things that are happening at the end and the beginning of the month. So we know right away this will definitely be on our radar here this morning. What day of the week? It's a Monday. What do we know about Mondays? Mondays are oftentimes a little bit sleepy to start, but they're always great at the end. Today is a great example of that. Today we have a Monday without any major news before the opening bell, but you'll notice we have some very important news here at 10 o'clock and 10:30. Both of these news events, pending home sales and Dallas Fed Manufacturing Survey, both of those will have an impact on crude oil, natural gas, gold, Russell. They'll have an impact on a lot of markets this morning. So we know we will have some opportunity, but as we drill into this, we notice that opportunity will most likely be in the middle to later, later portion of the morning trading session. Today's a Monday, and important, we know it's a summertime Monday. Now, as you can imagine, other traders are just like you. Probably spent some time at the beach this weekend or at the lake or maybe out in the boat having fun with friends and family, right? Maybe had a little bit too much fun and maybe you're having a difficult time getting back into the office this morning. As you can imagine, that's going to be the same thing for other people today. Now, I have a feeling the end of the month we'll have people getting involved much sooner this week, but at the same time though, summertime, Monday. Think about what that means to you and think about how that will mean to the majority of other traders. I know this morning I'm going to be staying patient, waiting for market personality, and I'm going to be looking for the meat and potatoes, the best trading opportunities to come right around 10 o'clock to 11 o'clock this morning. Now, you know me though. I'm going to be ready for anything. Even though we know what to expect today, I still need to be ready for pretty much anything that I see coming out the gate. So let's get prepared for anything. Price can move up, price can move down, price can move sideways. Price could also say, Joe, heck with what you think. I'm going to go on a tear here right at 8 o'clock this morning. So let's be ready for it. What do we see here? This is a 4-hour chart of crude oil. Now, a 4-hour chart, in my humble opinion, is a very good middle ground between a daily anchor chart and a fast entry chart, right? Like a tick chart or a minute chart. This 4-hour chart, which we've broken into minutes, a 240-minute chart, I'm going to load a year worth of data. And what I'm looking for is, I'm looking for two main things. I'm looking for direction, and I'm looking for major support and resistance. So first of all, what is the direction that we're seeing on this chart? Relatively simple, right? Price is moving lower. So direction is pretty easy. Where's my major support and where's my major resistance? Major resistance is going to be at sell zones overhead. Major support will be at buy zones below. So right away, we can easily identify some resistance and support, right? In fact, you can see our charts have marked it up for us automatically. As we go lower, we can see there's additional support at the lows of the channel. Additional support at what we call the BMT, right? The big money trigger line. We've got the 169, which is a trigger zone support. So as you can see here, we have located major support levels below us. What would those major support levels be used for? Targets, reversal points, places to tell us not to be trading. If I'm looking to go short, I do not want to get short directly on top of this major support. Now, if I am short, I will use that major support as a profit target, right? Pretty simple, right? What about resistance overhead? Resistance overhead, well, move your eyes higher. The highs of the channel. I've got the cloud as resistance. I have a sell zone as resistance. I have another sell zone as resistance. And of course, I've got the 108.93. All of these levels considered major levels of resistance. And as you can see, just took a few little trend lines there to draw the channel. The rest of this is done automatically via our indicator packages. So we know now that we have a downward moving market and we have resistance overhead, support below. Now, where do we see the easy money? This is very important because as a new trader, well, just like any other industry, I want the low-hanging fruit. I don't want to go out there and break my back all day long working hard, right? We want the easy money. Where do you think we'd find the easy money? Well, think of it this way. If you were to push price higher or push price lower, which direction do you think price would move easier? Right? Think of it that way. Put yourself in the buyer's shoes. If you push price higher today, or the seller's shoes, if you push price lower today, who do you think would have the easiest job? Well, if I had to guess, I would say the sellers would have the easiest job. Now, that doesn't mean we can't push higher. But what it does mean, though, is that if I have to choose a direction today, if somebody put a gun to my head and said, Joe, you've got to pick a direction and stick to it today, well, I'm going to stay to the downside, right? Because that's where we're going to get the highest percentage opportunities. It's easy to see it. The price can easily fall without running into anything, but it can't rise without hitting right away the top of that channel. So we know now the direction clues we're getting are quite clear. We want to be trading lower this morning, and we have some resistance overhead, but plenty of room to the downside as support. Now, let's go to a faster time frame. This 60-minute chart is really powerful. I use a 60-minute chart because, first of all, it's one of the most effective charts you can use, just simply because the most amount of eyeballs are watching it, right? You've all heard of that self-fulfilling prophecy. The more people that watch it, the more it is necessary that we watch it, right? Same thing applies to the 60-minute chart. The 60-minute chart, we can assume most people are watching, so we will also want to be watching. A couple of things we've noticed in the 60-minute. You can see right away here, 3 easy clues. Do you see them? What's the first clue? The first clue we see here is the bear channel, right? That's the same channel we found on the 4-hour. So again, we know long-term prices have been falling. Second clue we see, A, B, C, D. You know me, I'm a big fan of these symmetry patterns. And boy, you can see right here what a great example of how effective these symmetry patterns are. Don't forget, members, to come out and join us today in training, and we'll talk more about defining these symmetry patterns and how we can use them. Remember, in this case, this is symmetry acting as support. So this symmetry pattern acting as support now, we can see 1, 2, 3 different examples of us testing that symmetry support level. Very, very effective now at showing us we have some major support sitting here at 104.08. Now, what does this tell us? Remember, this is an anchor chart. What's our goal? Direction and support and resistance. What's my direction? Is it down? No, not so fast. What do you see here? I see double tops. I see double bottoms. Yes, I do see the long-term trend being down, but what's happening right now? What direction we're moving in right now? This looks a lot different than what we saw in the 4-hour. This makes me think we have a two-sided trading personality. This makes me think we have a sideways range. Now, I can still assume that the sellers are going to have the easier job because we still have that long-term downtrend. But boy, as I can see here though, if I had to guess right now, I don't have as much confidence as I did before. You can see this sideways trading range sneaks right up on us, but it's very easy to see. So let's use that range now as our biggest clue. We've got the highs of the range and the lows of the range. Okay, keep that in mind. This market looks like it could be range bound with a slight bearish tone to it. Let's keep investigating now. I move one time frame further now. Here's a 5-minute chart. The 5-minute chart is really interesting. Now this 5-minute chart shows us a bunch of interesting things here, guys. First of all, we notice right away, where are we in relationship to yesterday's trading range? Now, when I say yesterday, I mean Friday. Okay, so Friday's trading range, where are we in relationship to it? We are inside of it. But very carefully, though, look and see. The sellers tried to break below 103.87, and look what happened. Failure. What do we call that, members? We call that the inside-out setup. The inside-out setup tells us that the sellers have rejected, the buyers have rejected prices going lower, and price now will most likely end up testing the 105.60. This is very similar to all the market profile traders out there using the value area, the 80% rule. Okay, this is very similar to that 80% rule. This is a very simple setup that says if we reject lower prices from day to day, right, we rejected last Friday's lows, now we should see prices trade inside this range, and it should rotate up to that 105.60. So we should see this continue to go higher here up to that 105.60. Now, ultimately, when we find price action trading inside the range from yesterday, we now know there's a high likelihood that we are going to stay inside that range. So I will look to buy the lows and sell the highs. I will also be very suspicious of the good old fake out breakout at these highs, right? Just like we saw down here at the previous low of day today. So keep an eye on the previous high of day at 105.60 and the previous low of day at 103.87. 103 looks like 90 here, right? So very important there, 103.90, yes. Now, second thing we see is you'll notice how wide the range is overnight. This is quite interesting because on a Monday morning without really any major news before 10 o'clock, to have $1.25 trading range coming out of London, This tells us something's going on. There must be some risk acceptance, right? There must be risk on this morning. If we see a wide range like this, that means that traders have had a reason to be trading higher. Clearly, there's something going on out there that we may not have seen shown on the slower time frames. Guys, we know from just watching this for the past 10, almost 13 years now, 13 years this December, we know that when the range is wide coming out of London, we know that usually the overall range today will be wider. Now, it is not incrementally, it's not proportionate to how wide the range is, but we do know, though, to expect a wider range today. So that either means that we're either going to be trending today, right, trending higher or trending lower, or it means that we are going to roll around inside of this range today. Either way you slice it, the first thing I'm going to be doing today is looking to buy a pullback with a new higher high. I'll be looking to buy a pullback with a new higher high going up to that 105.60. I will then look to sell that high, of course, because it is the previous high of day. We go above it, we have the next stop here at 105.87. 105.87, again, I'll be looking for that fake out breakout and the return back into the range. If we do keep going, though, we will know we're trending, and I will be buying pullbacks. So I'll be buying pullbacks here with new higher highs using these two previous high of days as my targets. Then I'll be keeping patient, waiting for price to fail and go back into the range, because again, we do see some sideways trading ranges on that 60-minute chart. If price heads lower, I will also be looking for a fake out breakout just below the previous low of day, much like we've already seen today, looking to buy that 103.87. If prices do tend to go lower, we will be looking for price to keep going. In that case, we'll be selling retracements going lower. As you can see here, guys, we've got a little bit of a wide range this morning, but we do have a little bit of suspicion, though, here that we may be trading sideways. We go to one faster time frame now. We head on over now to our entry time frames. And on the entry time frames, we can see here, I just marked up some very simple stuff here this morning because we're not really, we're going to be looking at this in a faster time frame. But you can see here the slightly bearish trend we have, slightly bearish nature here, tone of the market this morning. Marked up the 104.14, that'll be support below. That's our trigger zone number 2. And of course, 104.87 is the trigger zone from top to bottom here. You can see it has rattled around that. Get a trend line overhead as well, so we'll look to be buying long here above that 105.22 if we can get some good market personality here this morning. Sideways range here this morning, as we can see on crude. Relatively wide trading range coming now out of London. So keep an eye on that, guys, as we go forward this morning. Keep an eye on that previous high and previous low. Those will be my most important levels here today so far. And again, if we stay inside the range from yesterday, I'm going to continue to trade sideways. We'll keep buying those lows, and we'll keep selling those highs. Now, again, I want to remind you guys that normally here we'll go jump over to Marty Errico down at Traders Audio in the pit, but we are having technical difficulties here this morning getting Marty on the trading floor. So on that note, I will wish you guys a very happy Monday morning, happy summertime Monday to you. And I'll encourage you guys to come out and see me again tomorrow morning, 7:30 a.m. Eastern Time. Monday through Friday, we do our crude oil morning prep. We go from the screen, usually over to the trading floor this morning. We'll be back to the trading floor tomorrow morning, as always. And again, I always welcome you guys to send us your feedback. Would you like to see me cover something new? Would you like me to see what's the good and the bad and the ugly about our broadcast each morning? Would love to know what you're thinking about our broadcast. Shoot me an email. I'm JJ at SchoolOfTrade.com. That's Marty at TradersAudio.com. And don't forget to come out and see both of us. Marty's broadcast starts at 8:50 a.m. Eastern Time. And my trade room opens up in just a few moments here at 8 a.m. Eastern. I want to thank you guys for coming in and seeing me here on a Monday morning. Thank you to the whole crew at Traders Audio for making it possible. And we'll catch you guys here tomorrow morning. We're on a 23-hour and 30-minute break. And I'll see you guys here on a Tuesday edition of our Crude Oil Morning Prep. Have a wonderful afternoon, everybody. Have a wonderful morning. Good luck out there today. Make sure you learn it so you can earn it. And we'll see you guys next time. Adios, amigos. Bye-bye for now.